Hey, what's up guys? Welcome to today's video. In today's video, I have a very exciting video for you. Today's video, we are talking about the quarterly theory daily protocol for consistent profits, guys. So make sure you pay attention, bring out your pen and paper because what I have for you is very valuable. And if you do backtest it and put in the effort to learn it, take notes, you are going to be surprised yourself. Thank you. All right, so we are currently on the charts, right? So what we can see on the charts is that in the previous video, we talked about this SMT that is over here. And we said that this should cause price to go higher. And it did over here. As you can see in Dow Jones, it took out the high of the previous month, while in the other assets, it actually failed to take out that high, causing a new SMT to form, meaning that our bias will change. At the same time, what happened was that the SMT was confirmed by this candle over here. As you can see, this candle is bearish in S&P 500 and NASDAQ, but over here in Dow Jones, it's bullish. So you can be able to tell that this candle will likely form a TPD just because how far away it closed over here from the close of this candle, meaning that likely next week, if there is no news that is over the weekend or any geopolitical news that happens and the market doesn't gap massively in one direction, we can expect that price on the Dow Jones will open somewhere around here, while in NASDAQ it will open somewhere around here, and S&P 500 it should open somewhere around here, meaning that a TPD is likely to form, confirming this SMT over here, meaning that our bias is now going to be bearish, and where the targets are going to be these lows right now. As in the previous video, I said that unsymmetrical lows are your targets. This is the higher time frame bias. All right, so this is the section that we are talking about the economic calendar. Starting every single week, we will always begin our analysis on the economic calendar. The first thing that you want to do when looking at the economic calendar is to check how many news is coming out for the week. If you count all of these, you will see that there are 10 red news folders. And just for your information, these are my settings. I only select the red news folders, USD news, and I just select this just in case a bank holiday is coming out, and I apply this filter. So there are 10 news folders that are coming out this week. The next thing that you want to do is to see how many of those news folders is distributed among each trading day of the week. From what we can see that Tuesday has the majority of the news that is going to be coming out for the week. Therefore, Tuesday is going to be the most significant and volatile trading day of the week. This means that we are going to expect that by the end of Tuesday, the high of the week is going to form. And notice I say high because we just previously established that going into the week, we are going to be bearish. Does this make sense? So this is how you use the economic calendar to map out what is likely to form during the week. All right, now we're getting to the part where you really need to pay attention. So starting every trading day, there is an order of operation that if you follow, you are unlikely, if you are doing it correctly, to incur a loss that you were not supposed to take if you are right on the direction. So the first thing that you want to do is to know that this trading day, does it have news or does it not have news? Because if it has news, then you will trade around the time that the news is released. But if it does not have news, your best bet is to trade at 9:30 bell opening, when the stock market opens, right? So there is an order of operations that you need to follow. And the order of operations goes as follows. You start on the 6-hour time frame and you're looking at the midnight candle on the 6-hour time frame to check if it is a TPD. As you can see on all three assets, this candle is a big bullish candle, so a TPD is highly unlikely to form. Then you go down to the 4-hour time frame, and when you are on the 4-hour time frame, you want to look at the 2 a.m. 4-hour candle to check if it is a TPD. Notice I said the 6-hour candle and the 4-hour candle. We're basically trying to see if the London candle is a TPD, because if it is a TPD, then we will expect a daily cycle sequential SMT to form during the New York session between London and New York. And you know that as day traders, we trade the New York session because it is the highest probability session for a day trader. All right, so as you can see on all three of the candles, this 2 a.m. 4-hour candle is not a TPD. Therefore, we will now go to the 1-hour candle. Now that we are on the 1-hour candle, we are going to wait for the New York session to start. So currently this is the 6 a.m. candle and we are in the New York session. The first thing going into the session, we want to mark out the true opens of each asset. That means true day open, TDO. As you can see, the true day opens have been marked on all three assets. And price is above the true open, which is a good thing because we want to see it above the true open if we are looking to sell, which we are looking to sell because we are bearish on the trading day and even on the entire week we will be bearish. So we want to see price trade above the true open. Now that the price is above the true open, we will look at the 7, the 8 a.m., the 9 a.m. and the 10 a.m. candle to check if it forms a 1-hour TPD. This is the next order of operation that we follow. So let's see. As you can see over here, this candle is a TPD, but this trading day does not have any news. And it doesn't have any news, so a TPD forming on the 6 a.m. candle is not, number one, ideal because we want to see it on the 7 a.m. candle. But at the same time, it is also going to be low probability because there is no news coming out. So the best entry signal should form around that 9:30 window. So we will ignore this. We will ignore the 6 a.m. TPD because it is not a TPD that, number one, is part of the order of operations. Remember what I said, starting from the 7 a.m. candle, not the 6 a.m. candle. The 7, the 8, the 9, and the 10 a.m. candle. As you can see, price pushed above. So if you had tried to enter this, you would have likely lost the trade. The next thing is that once we are on the 8 a.m. candle and we see that the 8 a.m. candle did not form a TPD, we need to be cycling through the 1 hour and the 15 minutes for every new hour that passes, because starting at 8:30 all the way to 9:45, you want to see a M15 TPD form. So whenever we are on the 8 a.m. candle and we saw that it was not a TPD, we know that we are also keeping an eye to check if the 9 a.m. candle is going to be a TPD. But at the same time, we also need to check if in the lower time frame between 8:30 and 9:45 does a M15 TPD form. So right now, the 8 a.m. candle is closed. I'm going to go all the way to the 15-minute chart just to be checking. And if I cycle through the M15 and I see that I enter into the next hour, I will go back to the 1 hour to check if a new TPD formed on the 1 hour time frame. Otherwise, I will stay on the 15-minute time frame. Okay? We trade higher. Again, there you can see that this candle right here is a 9:15 TPD, because look where Dow Jones closed. So it's likely going to open lower than where this candle closed, while this one is going to open higher. So we're going to see that divergence between the candles, confirming that this one will be a TPD. So as this TPD is forming, what you can simply do is that, because you see that this body is rather large, what you do is that you take the body of it, right, and then project it 1 standard deviation higher, right, because we don't look to sell the Dow Jones because it can be unpredictable. And then you would enter around here and put your stop loss slightly above the high. But let me tell you another secret. In this case, Dow Jones right here is the bearish TPD there, and we are looking to sell. Therefore, it is the strongest candidate for downside. But we don't like to trade the Dow Jones because it tends to do its own thing after 9:30. It usually moves its own direction. That doesn't always happen, but there is a probability that it may happen. So what we're going to do is that we are going to trade the ES. Whenever Dow Jones is the best candidate for a trade, we will trade S&P 500 instead of the NASDAQ. This is a good practice to take. So what we're going to do is that we are going to go into this over here, and we're going to take from the body all the way here to the high, projected 1 standard deviation above, and we will enter a sell over this section, and our stop will be here. And you can simply target a 1:2 or more. But I can see that this low is not even the low of the previous day, and that would be an obvious target to target the previous day's low. So I'm just going to target this low because I get at least even 1:3. So let's see what happens. As you can see, on the very next candle, it trades slightly above and it immediately hits the target. And that is how you would have caught an easy day trade for the day. This is because you had the bias already in mind and then you followed the crack in correlation that is supposed to activate your... All right, so you can see that that was a wonderful trade if you follow the protocol that you do as a day trader. And you can see that Monday traded real nice down. Now you obviously saw that there was not really a sequential SMT. However, if you know how to use the TPD and you follow the TPD protocol that I just shared with you, you will be able to capitalize off the TPD if you know the direction for the day. Because sometimes what happens is that it's either going to be a sequential SMT or it's going to be a TPD, or it might be both. You understand? So what happened is that we saw that Monday traded nicely lower. Now, remember in the section of the economic calendar I shared, and I said that because Tuesday had the most news drivers coming out, Tuesday is the most significant day in the trading week. Therefore, by the ending of Tuesday, we would already expect the high of the market to form because we are bearish. So what could happen is that it could either form on Tuesday or it could form the day prior to it. Therefore, this is why I marked the start of Monday and the end of Tuesday, as this section over here is where I would expect the high of the week to form. So what we can see now is that Monday traded nicely lower and it left a 4-hour fair value gap that has not been filled. This is a good sign. So what happens is that whenever you have a 4-hour gap form on a Monday or Tuesday or a Wednesday, right, in this case a Monday, and it is not filled that day, if price trades into this 4-hour gap the next day, it is a high probability chance that it will sell. So if you look over here, can you see that the current new week opening gap is also nested inside of the fair value gap that it left, making this area a higher probability sell scenario. All right, so as you can see on all three assets, you can see that we have formed and marked out the fair value gap that had formed, right? So this is a setup that is very powerful. I will be honest, I learned this from Jacob Speculates. Very powerful concept where price forms a fair value gap one day and then the next day it trades back into that fair value gap in a sequential manner. This is called the sequential gap that Jacob Speculates introduced. Right, so if price enters into this level, it is likely to sell because Monday had an expansion. So meaning that if Tuesday trades inside here and trades lower, that means the high of the week is already in play, and that is what we are anticipating. So if you are a short-term trader, you can simply already place your entry just above here, right? And you can target the low. You can put your stop loss slightly just above the gap because you don't want to see it overshoot the gap. So you can just target something very simple. Right. Now, in saying this, the reason why I'm choosing ES is because ES is the only asset that has a new week opening gap overlapping with its own sequential gap. So it is very, very, very powerful entry for ES. Right. All right, so now we are going to start with our daily TPD protocol. And as you know, we will start on the 6-hour time frame. And our aim is to see if the 12 o'clock midnight candle, the London session candle, prints a TPD. So we're going to fast forward. And as you can see, that midnight candle is not a TPD. So then we go down to the next time frame. And as you can see, the 2 a.m. candle is also not a TPD. Now, in this video, you're going to notice that we're not really going to find any of these candles for this week. But that doesn't mean another week it won't form. But I still need to follow the protocol so that you know how it is done. So since it is not on the 2 a.m. candle as well for the 4-hour time frame, then we will stay on the 1-hour time frame. Now, once we are on the 1-hour time frame, the first thing that we will do is to mark out the true open of the day. And as you can see, we have marked out the true open for the day. And what we want to see is that price trades above it, forms a crack in correlation, and then we will expect price to trade lower because we are bearish. So we have our higher time frame level already marked out, and we're going to see if price at least gets there. All right, so now that we are on the 1 hour and we have marked out all the true opens on all three charts, you can see that price is above the true open, which is what we want to see, and our higher time frame key level is resting above the marketplace. So starting on the 1 hour, we are interested in the 7, the 8, the 9, and the 10 a.m. candle. We want to see if a TPD is going to form, and at the same time we want to see if price is going to give us a short-term traders entry, right? So we have that level resting above the marketplace, right? And we want to see what is going to happen. So let's play this out. 6 a.m. candle, we are not interested. Starting from the 7 a.m. candle is where we are interested at, but it is not a TPD, right? So I'm going to go down to the 15-minute time frame because this is the 7 a.m. candle, and the next candle that is going to form is the 8 a.m. candle. So I'm going to keep my focus on the 15-minute time frame because starting from 8:30 on that time frame, we want to see either a TPD form or a sequential SMT on the lower time frame as well, but mostly a TPD there as well. So we're going to check if a TPD is going to form on the M15 starting from 8:30 all the way to 9:45. So this is where 8:30 begins, so that's why I'm going to fast forward to. And as you can see over here, this is 8:15 is a TPD, but we don't want to see on the 8:15 candle. It is only permissible starting from the 8:30 candle. So we will ignore that. And as you can see, price drastically traded above that candle. So had you traded that, you would have most definitely lost on that trade, right? But what you can see is that our higher time frame entry was triggered. So we're currently in this trade, and I marked this level just so that you can see that that is where our take profit is. So price is trading nicely in our direction. Now we just need to see if a lower time frame day traders entry is going to form. So far we don't have a TPD yet, but we're going to see. Alright, so the next candle that forms is a TPD, but I want you to see that this is not really a high probability TPD because it is a TPD that is forming in a discount. Anytime you have a TPD that forms in discount, let me show you. From the current high to where the TPD formed, this TPD is in discount. Anytime you have a TPD form in discount, there has to be a higher time frame crack in correlation that caused price to expand lower to form this TPD. Then this TPD is used as a continuation for further downside objective. But that is not what happened. Price just traded higher, and now it came down from this TPD. So this TPD is low probability. What you want to see is either a sequential SMT that took place in premium or a TPD formed in premium. Price then expanded, forming this. Then you would then say that this is safe to use, but that is not what happened. So we are most definitely going to ignore this, and we're going to go back to the higher time frame, which is the 1 hour. So this is currently the 8 candle. We'll see what happens on the 9 o'clock candle. So what happened on the 9 o'clock candle? A TPD has formed. Now if you look very closely at this TPD, this is candle number 1, this is candle number 2, the TPD, right? If you see where price is going to open, it's going to open here on candle number 3. Candle number 2 is taking out the high in this asset over here in NASDAQ, but over here it is not taking out that high. And to look at this properly, you would have to go to a lower time frame. So whenever you're dealing with 1 hour TPDs and you're trying to gauge SMTs that are taking place, you use the 5-minute time frame for the 90-minute cycles. So what I can see over here is that a 90-minute cycle sequential SMT is currently taking place. So right here we can see that price takes out the high of Q2 during Q3 of the 90-minute cycle, yet it fails to do so, right? So I can see over here it is getting rejected at this up close candle right there. I can just say that's a bearish order block, right? So my entry is going to be here. So what you should notice is that I always like to have 2 things going on for me for an entry: a cracking correlation and something confirming that cracking correlation. So what we had was a 1 hour TPD with a 90-minute cycle sequential SMT. So stop loss will be above the high of the previous quarter. Take profit can be a nice 1:2, 1:3, but I'll just put it at this low for 1:2 because it is also beyond my objective. And just so you know, you can see that my take profit has been hit for my swing trade, but now we have a day trader's entry as well, so we might as well just take it as well to see what happens. And as you can see, take profit gets nicely hit. It even goes as far as a 1:3. So if you're a trader that trades 1:3, you would have also gotten hit as well. So that is how you would have capitalized on the swing or the short-term traders entry. Over here, price hits you out nicely, and then a day trader's entry. If you don't do short-term trade, no problem. You have your day trader's entry, 1 hour TPD, 90-minute cycle sequential SMT. They go well together. Boom, you enter. and you're simply following the higher time frame direction. If I saw a 90-minute cycle bullish sequential SMT, I would have ignored it. You have to follow the higher time frame direction and draw on liquidity. Thank you. All right, so that was the trading for Tuesday, and as you can see, price didn't really do much, but you would have definitely hit take profits had you not, number one, be greedy, and had you used the protocol the correct way that they are supposed to be used, right? So you can see right now that price over here is here, and price has slightly done a retracement, and we are towards the ending of the window that we have shaded where we want the high of the week to form. So it's very safe to now say that this high right here will be the high of the week, because we are now entering into the second half of the week. So right here is the current low of the week, and in the second half of the week, what you would then expect is the low of the week to form. You don't expect the low of the week to form in the segment in the first half, right? Because you are bearish. In this half is where the high of the week is supposed to form, but not in the low of the week, not the low of the week. It is in this segment that the low of the week is going to form. Therefore, it is safe to say that this low right here is going to likely be taken. So we can continue to be bearish, and we're going to look for a bearish crack in correlation to form during this day, right? So what we're going to do is that we are going to check and see. We start on the 6-hour time frame, and as you can see, the 6-hour time frame does not form a TPD, right? So what do I then do? I now go to the 4-hour time frame. The 2 a.m. candle on the 4-hour time frame does not form a TPD, so I now go to the 1-hour time frame. The 1-hour time frame, what I can see, however, just before I get into the trading day, I can see that a sequential SMT on the weekly cycle has formed, right? So over here, this is the high of the previous day, and price has taken it out during the London session, which is something that we should keep in mind, right? Okay, so now that we have noted the SMT that is taking place, the first thing that you want to happen when you see an SMT is that, is it confirmed by a TPD or a lower time frame sequential SMT? So on the same time frame, the 1-hour time frame, the first candle that takes out the high of the previous quarter, right? This is the trigger candle that causes the SMT, right? You want to see this candle either be a TPD or the immediate next candle. If it doesn't do that, we then are going to use the 1-hour TPD protocol, which is the 7 a.m., the 8 a.m., the 9 a.m., and the 10 a.m. Only those candles can then form a TPD later in the day. So when you have a sequential SMT, it is either the candle that causes the sequential SMT or the immediate one. If not, it then has to be our TPD protocol candles. Okay, so let's see what happens. We're now in the New York session, right? As you can see, this candle is a TPD. We are not interested in it anymore. It can only be part of the candles that are part of our protocol for a high probability. So we are going to ignore that candle. And as you can see, the 7 a.m. candle looks like it's going to be a TPD, right? So what we are looking is where this candle closed and where this one is going to open. If it opens higher, then we might have a TPD on standby. So we are going to watch this 7 a.m. candle to see what is going on. In fact, remember what I said earlier on? You have two confirmations for your entry as a day trader. So here we have a sequential SMT, and at the same time, we just have a TPD that is part of our protocol confirming the SMT as well. So what you can do is that you can already start entering here. So I'm going to do that. I'll put my entry. I'm going to enter on S&P 500, and my stop loss goes above the safest place that is highly unlikely that our stop loss will get hit. So that is above the previous quarter's high, and I'll illustrate the asset that gives us the lower high. I would have traded Dow Jones, but Dow Jones is unpredictable, so you never want to trade Dow Jones. Sometimes it can really move nicely in your favor, but some other times, especially at 9:30, it likes to do its own thing. So it is best to really avoid Dow Jones in the long run if you want good consistency. 1:3, right? And then we're also going to check the lower time frame if we get a day trader's entry, because right now what I'm entering on is more of a short-term trader's entry, right? Entering on the 1 hour, but it is a good entry as well that you can capitalize off of. So I'm going to go into the lower time frame and check if anything takes place there. 15-minute time frame. All right, so I'm on the lower time frame right now. I'm currently on the M15, and I'm going to check what happens. So as you can see, right, price is expanding lower. Then as you can see over here, a TPD forms on 8:30. But what did I say? I said that it is forming in discount, and there had to be a higher time frame cracking correlation in the price swing that causes it to go down. There is none of that there. So therefore, this TPD is not going to be of good substance to us. As you can see, price trades higher, and then we can go back to the 1 hour time frame to see what happened on the 9 a.m. candle as well. And as you can see on this candle, the 8 a.m. candle is another TPD. So we have two back-to-back TPDs, right? So that is a good sign for us, and we can see what happens. And just like that, our take profit just got hit, right? So on the lower time frame, you can see Dow Jones is really just trading higher and doing its own thing. That is why I said that it is best to avoid Dow Jones, because sometimes for no reason, without any logic whatsoever, it just does its own thing, right? So if you, for instance, did not catch the entry, you can use this level and make a continuation, right? So what you can do, you can see a fair value gap has formed right here on the M15, right? And it still looks like there's further liquidity to the downside. So you can, for a day trader, 1:2, because we are really expanded already. So let's see what the second entry is going to give us. And it's based off this fair value gap that is here, right? So let's see. We're triggered. And take profit hit as well. So this is how it was traded for Monday, Tuesday, and Wednesday. 3 good trading days. For me, if I had something like this, I would be done for the week. I wouldn't really look to do anything else. Alright, so this is the section that I'm going to show you my executions. Now, this is a paper trading account for compliance issues. However, I do have my own personal trading account that I trade myself, right? So I'm just doing this to show you that this is not hindsight, that this stuff actually works. And if you do put in the practice, you can do it for yourself as well, right? So Monday, I didn't trade on Monday because I was very busy that day. However, I know a lot of people that traded on Monday and caught a nice move on the M15 TPD that formed. They caught it. In fact, even as price was expanding here, they just traded because it was relatively very close to the TPD. So they sold somewhere there and they caught a very nice move on Monday. I could not catch it. But on Tuesday, I indeed traded it, right? And what I'm going to do is I'm going to expand this chart, right? I'll expand the chart and I will put settings, show my execution so you can see that for yourself. So as you can see, I entered there, got out, right? And if you took the day trader's entry here, you would have caught that as well. So my entry was at the high time frame key level, exited, right? And just so you can see, I turn it on and off for your confirmation. Next, we'll then now go to Wednesday. On Wednesday, right, you can see that I was very quick, so I sold there, exited there. As you can see, those are the entries. You can hold them longer. I don't like holding longer, right? I don't really like to hold too long, but you can most definitely do that if you want to. I like to be in and out for your confirmation, right? So put these things into practice. They really do work. Take it from me, it is very powerful. Knowing the higher time frame direction, and then in the intraday using at least 2 cracks in correlation for your entry. You understand? Just practice the different entries, and before you know it, once you know the higher time frame direction, it's going to be very hard. If the market is going to move in your higher time frame direction and you are correct, you're going to catch most of the moves. Are you going to be wrong sometimes? Yes, of course you're going to be wrong. Will you go through losing streaks? Yes, but you need to backtest these things so that you can remind yourself that these things work in the long run, and you can be able to build a profitable trading career using these things. Okay? Have a wonderful day. Make sure you like, you comment, and you subscribe to the channel. Comment down videos that you would like to learn about, because there are many things that I do know and I'm fortunate to know, and I am willing to share them with you. Thank you very much.